All right, so we're going to move on to the next session, talk about fintech. So there was this word called fintech, and then this new word coming up as techfin. So if you look at what has happened during the past 3 to 5 years through P2P lending, to robo-advisor, to the blockchain cryptocurrency mania last year. So what's going to be the next big thing in fintech? So let's hear in conversation with Robin from Reuters. Please give a welcome to Vikram from Matrix Partners India, Mansi from Goldman Sachs, and Donna from Ping An Insurance. Please welcome. Thank you.
Hi, everyone. Welcome to the FinTech versus TechFin panel. This is a really timely topic. So TechFin refers broadly to the trend of big tech companies pushing deeper into financial services. So just last month, we had Facebook unveil its plans for its own cryptocurrency. And of course, well before that, we've seen companies like Jack Ma's and Financial leading the charge against banks in China for many years now. So we're joined by 3 investors today. And if I could ask each of you to just very briefly give an introduction to what you do, just to give some context. Vikram, maybe you can just start off.
Sure. My name is Vikram. I'm a partner at Matrix Partners India. We're an early stage venture capital firm. We manage roughly about $1 billion across 3 funds. Our latest fund is about $330 million. We invest at seed, Series A, and Series B very early. 50% of about our portfolio over the last 18 months is fintech. We've probably invested about close to $150 million in fintech in the last 18 months.
Hi, everyone. My name is Mansi Sun, and I co-run the Principal Strategic Investment Group for the APAC region for Goldman Sachs. And we are globally about 25 investor team and managing about a 1.5 billion. It's all on balance sheet, Goldman Sachs' own money, invest in potentially strategic opportunities in the fintech, broad fintech, and also enterprise technology space. So we're not a fund, but if we are a standalone fund, that would be the largest fintech fund in the world.
Hi, everybody. I work at a fund called Ping An Global Voyager, and I guess a little different from Mansi. We are technically a fund, but similar to Mansi. If you were to look at our LPs, it's exactly one, and that one is Ping An Overseas Holdings. So I think conceptually pretty similar to what it is that Mansi does at Goldman. We are more growth stage investors. So we typically put more money in at sort of the Series C, the Series D round. We manage $1 billion, and we focus on fintech and health tech.
Great, thank you. So I'd like to just open the discussion off with how you guys see big tech in financial services. And Don, I'd like you to start off because you seem to be on the opposite end of the move fast, break things spectrum. So what was your gut reaction to Facebook's cryptocurrency, for example?
I'll tell you what, you guys, you look at me, I'm obviously American. I'm obviously working for a Chinese company that has gotten a little more awkward in the last year. And a neat thing about Facebook is that they've done what I think nobody thought possible. They've managed to unite the American government and the Chinese government. Everybody hates it. I guess that we Ping An by background. We started 30 years ago as a marine insurer in Shenzhen. So our roots are very much old economy, balance sheet, traditional financial services. We today insure 1 out of every 8 people in China. We employ 1 out of every 800 people in China. So on the one hand, a very large, successful traditional financial institution. On the other hand, we embraced about 10 years ago a move to cloud and a vision of kind of building our own collection of digital ecosystems. And today that includes a company called AutoHome, biggest online car marketplace in China. Ping An Good Doctor, biggest telemedicine platform in the world. Lufax, big online wealth management platform. And so I guess we straddle the digital divide. We have incubated a lot of scale new companies, but we also are a traditional financial services organization. And I feel like there are definitely lots of parts of the economy around the world where it is a totally viable strategy to say, yeah, there are rules, there are regulations, and what we're doing is, yeah, it's kind of against the law, but we're just going to get big, and that's going to be great, and we'll figure out the other stuff later. Kind of seems to me like financial services is not one of those sectors where that's a viable strategy. And I think that the core ethos of move fast, break things is maybe not a great strategy when you move into financial services. And I think some of the regulatory reaction to Facebook, I think, suggests a bit of a collision between a world that is highly regulated, that expects things to be done in a certain way, and importantly has the ability to stop things if they don't like it, with a part of the economy that just does things very differently.
So I'm going to disagree a bit, and I'm going to give some context. What fintech is about and financial services about is a store of value and a control of the store of value. We all place value. We used to place value to gold. Then we said INR. Now you actually believe that when there is a number on a screen, that's your value. So there are banks and traditional financial services, and by the way, I'm on the board of 2 traditional financial services companies who have a store of value and then are trying to marry that with user information. And then there are people who have user information who are trying to marry that with store of value. And that's the sort of collision between these 2 approaches, which is sort of fintech. I have the store of value, and I'm going to see how I can get user information and get more innovative about products. And then I have user information, and how do I get innovative and get and capture store of value. Now, I actually think that it's immaterial whether we talk about fintech or techfin. It's just going to be a new world where everyone's going to look at it the same way. So the tech guys have to learn financial services, which is risk collections. It doesn't matter if you give money away, you have to get it back. And the tech guys actually have to, the fin guys actually have to learn tech. And I think that this is going to be a new world where everybody is going to be thinking the same way.
Okay, so I'm actually the exact opposite position as Don here. I'm Chinese working for a U.S. company. And our company is probably one of the most regulated companies in the world within the financial industry and regulated by the U.S. regulators. So I'll say this. So probably it's not something that we're able to do because we're a heavily regulated financial institution. And a lot of time we spend with our portfolio companies is also to help them once they reach the growth stage and for them, how to become compliant within a regulated environment. But for people who want to try, who want to break things, if they can be successful, we should celebrate that. If they are successful, we all benefit from it.
I mean, I think that's actually a really interesting point you bring up, which is, I guess, because tech is not as regulated, they have some sort of competitive advantage over the traditional financial firms. So how do you see, I guess, some of the dynamics of this competition playing out? I mean, how are traditional banks, and even startups for that matter, how will they respond to a $500 billion tech company with, 1 billion users?
Maybe I can take that first. So part of my group's history, so the principal strategic investment in Goldman is actually the own balance sheet investment that we founded internally because we realized that we need to work with the tech community and we need to be the eyes and ears of Goldman Sachs, which is a very traditional financial institution. And obviously, if you look at today, even a firm like us, more than one third of our employees are actually working in the technology division. So it is just simply, technology has simply become too important for us to ignore. And Goldman is also is also in the middle of building its global payment network. We could have, if we do the same thing 20 years ago, we probably would have built everything by ourselves. But as we're building the global payment network in the past 2 to 3 years, we actually utilize a lot of third-party vendors because API is available and the technology is mature to the stage that we're actually able to utilize, and it makes more sense for us to utilize a lot of third-party vendors instead of doing that by ourselves. And so that's part of our job, to be always a little bit ahead of where our core business is heading and to test and to try different things within the technology realm and to see if that works out. So that's part of our strategy of how to tackling that.
India is a bit different. I was talking to Mansi just before that the Indian model of fintech is very different from some of the global models, and it's about the context. India never really had a very large financial services ecosystem. Like 50 million people in India were really banked and with access to financial services. So fintech came at a time when that 50 million was going to 500 million. So pretty much everybody had to be a fintech to actually drive that penetration. So the Indian model is, one, everybody is regulated. If you want to be part of the fintech ecosystem, RBI regulates everybody. Second, all the banks created APIs, so you had to plug into the banks and create all of those APIs. And third, you could create pretty much any product that you wanted if you could do the first two, which is regulated and plug into the bank APIs. I think in that model of fintech, the RBI and the government is more secure, that it's regulated and you're preserving essentially current account, savings accounts, and so there's no civil war. But you're also driving penetration at the same time. And I think most countries will evolve to that kind of model because there's no other way to do this, where you can't prevent consumers from using tech to access their money. So you need to figure out a regulated environment and one where banks control the savings, or at least make their savings secure, but still allow innovation.
Yeah, I think. Well, I think actually there are plenty of ways for governments to prevent consumers from using tech to access their money, as long as governments are in the business of regulating deposit-taking institutions. And I think that if you're a large technology company, I guess that you start the three of us, we quit our jobs, we start a thing. Probably no one really cares if we are running afoul of a few regulations in a few countries. If we are Google, Facebook, and Amazon, and we have exactly the same model, you better believe that governments are going to stand up and take notice, and that's what we see happening over and over again. It kind of feels like, from the standpoint of traditional financial institutions, that part of the challenge is doing what you do better. And that means accessing maybe third-party service providers to reimagine a core banking tech stack. And there, no doubt, that's a good use of time if you are a bank, if you're an insurance company. It kind of feels like that's only half the battle. And I think the other half, and Goldman Sachs Marcus would be an example of this, is kind of reimagining what it is that you're doing. And I think that something that is kind of neat about India and about China is that I think traditional financial institutions are maybe more comfortable with not staying in their lane. I feel like sometimes Western financial institutions tend to think, well, historically, I've been a deposit-taking institution and I've lent against houses, and that's all I'm going to do for the rest of my life. And if you stay in your lane too much, I have a feeling that there's a bit of a danger of margin compression and ultimately irrelevance.
I guess to that point, I mean, clearly there are quite a lot of differences between India, China, and the rest of the world. But with Facebook now, I mean, do you think something, with Facebook going into payments and e-commerce, do you think the banks there now have sort of been, they're realizing that they need to change, they need to sort of catch up, if this continues?
I don't. I think a lot of banks kind of get it already. I think that it's very. There's kind of acknowledging the problem, and then there's kind of being constituted in such a way as to do something about it. And the reality is that the way a lot of banks are just architected from a data standpoint, from a people standpoint, they're not particularly well set up to be agile responders to the challenges that are posed by the likes of a Facebook. So there's understanding. I think everyone's there, and the challenge that I think a lot of banks face is, well, how do you actually address the challenge? And what? It's not easy. You have all kinds of, you have a shareholder base that probably doesn't react to certain expenditures. You have accounting rules that are not particularly friendly to certain kinds of investments. You have a lot of embedded disadvantages compared to the likes of a Facebook.
That's and we're final few minutes, so I would like to close with sort of a last question. So the year is 2030. You are shopping at a supermarket, completely manned by robots, and you take out your phone or your wallet. What are you going to pay with? Are you going to pay with Libra, Bitcoin, cash, or currency of your choice? And why? I will let Nancy, start.
Yeah, the first question is, will we be taking out our phones or wallets?
Or will I be going to the supermarket?
You guys are fighting the question, man. That's not fair.
Don, what will you be paying with in 2030 at a supermarket?
If regular old currency is an option, I'm going to go with regular old currency. I think it's quite a profound thing. I mean, don't underestimate the power of the power that accrues to anyone who controls a reserve currency. And that's not a power that anyone is going to give up willingly, and it's something that is well within the power of governments to stop challenges to that. By 2030, I'm pretty sure I'm still going to be paying in a currency that we would all recognize today.
Okay.
I would agree. I think both geopolitics as well as sort of, at least from an India perspective, the fact that you're in a growth phase, we're not going to give up control over currency and having a reserve currency that we have some control over.
Nancy?
Yeah, I wish I could have a differentiated answer, but unfortunately I have to agree with that. I think the form factor or the format probably doesn't matter, but I do think it's going to be regulated.
Okay, so we have 3 skeptics of crypto and Bitcoin and Libra here.
Well, I wouldn't say. I think there is crypto as a store of value and crypto as a way of exchanging services. You actually pose this as retail and consumers using it. I would say that that's less likely to happen. But if you say there is a large portion of my net worth might be in alternate assets which are governed by crypto, I would say, at least for me, that would be true. And second, do I see that there will be a new version of internet where you're able to transact services amongst especially tech companies and tech service providers with sort of some kind of cryptocurrency? I think that's definitely going to be true, not even 2030. It will probably be true before 2025.
Totally agree. And I mean, one thing that should not be lost in all of this is that, a great thing about what Facebook seems to be imagining with Libra is the fact that for the first time in history, it'll be possible for people who are not of economic means to transact in a way that doesn't carry with it tremendous frictional costs. I mean, a great appeal of cryptocurrency is that you are able to engage in cross-border commerce with virtually zero frictional cost. And if you care about equality if you care about income inequality, if you care about the plight of people who are economically disadvantaged, the burden that is imposed on those least able to bear it around the world by just cross-border transaction fees is huge. So there's a lot of promise there, but that's a very different question from is the U.S. government, is the Chinese government going to willingly roll over and say, yeah, I guess our currencies don't matter anymore?
Thank you, and that's the end of the panel, so thank you.
Thank you.